Hi, it's Larry Gaines from Options on the Open. I wanted to give everybody a quick update on the market outlook on the S&P 500 using the power cycle trading model. And this is heading into Bernanke's speech at Jackson Hole tomorrow, which is on August 31st, last day of August. But anyway, before I get started, it's going to be a quick video, but I just kind of want to show you where we have come from and where we are potentially headed, and using a power cycle trading model. So taking the fundamentals, taking the noise out of the market, and just looking at purely a technical price cycle timing model. But before I get into it, if you've not received my free ebook, Make Money Trading Options, Top 15 Option Trading Strategies, just put your name and email address in there and you'll get it right away. The other thing too I wanted to talk to you about and just point out is the money show coming up, and let me show you something on that real quick. September 14th, I'll be speaking at the Money Show. It's a forex and option expo put on by the Money Show. It'll be in Las Vegas at the Paris Hotel. So if you're out there, please come by and check me out. That's on Friday, September 14th. I'll be speaking at 11 a.m. And I would look forward to meeting anybody that's there, and love to talk to you about trading and options and everything else. So if you get a chance, come on out and visit with me. So let's get started. The long-term trend is still up based on the power cycle trading model, and this is using a weekly time frame. So I put the model and I run it using the weekly data, and it went into a long-term uptrend cycle low. Is what we call it, on June the 8th. Still in an uptrend, but it's very close to turning over, very close to being neutral. So tomorrow being Friday, the end of the week, we'll know then. But right now it's still in an uptrend, but very close to turning over just to a neutral position. Now the medium-term trend, as measured by a daily time frame on the S&P 500, is down. The cycle high, based on our system model, was on August the 21st. So if you want to confirm this, please go to my blog video. You can see it on my website. It's on August 21st, and it's titled the S&P 500 Showing Signs of Fatigue. So if you go there, see that, you'll see that the cycle model, we had it a cycle high, which is potentially you either exit the market or you go short here. And that was on August 21st. So check that out, and you'll see that it does confirm this particular time frame. And you can see how this model has been just picking off the cycle lows, cycle high, cycle lows, cycle highs, lows, highs. So that's the way it's supposed to work. So go to that video if you'd like to check that out. And now the next time frame will be the intermediate time frame based on a 60-minute time frame, and I'll show you where that is. So currently the medium-term trend is still down, and we had a big sell-off here today, coming into some support right here at 1397. So we'll see what happens tomorrow. Now this last chart, this is the intermediate term time frame. This is measured by the 60-minute time frame. And this is a time frame that I use for swing trades, and it'll really get you in a kind of a start of a new cycle trend. So you can see here that we're still in a downtrend, which actually we had a cycle high today on August 30th. This came right at the first 30 minutes of the market open, and the model gave a cycle signal that we had reached a high, and then it was turning over. So that came right there. So it's been holding this position all day. It was very close right here to going back to neutral, and then we sold off here at the close. So we'll see what happens. But you can see it's been in a very tight range here for a while. You can see it's went long here, neutral, then short, then long, then neutral. So it's really tight, bouncing around here. But when you get these big moves, it really nails the highs and the lows. If you have a good wider range expansion, when you get these narrow ranges, it kind of chops back and forth. But when you get these big ranges, that's where it really comes in handy, and it really kind of leads into what the broader markets could be doing as far as a medium term to even into a longer term trend. So that's currently where the power cycle trading model has the market, from a long term, which is still up but very close to going neutral, to the medium term based on a daily, which is still down, and the intermediate term based on the 60 minutes, which is down and went down today. So good luck trading tomorrow, and if you'd like to see how we use the power cycle trading model for all of our trading, please come join us at optionsontheopen.com. And I'm also having a special, so check that out as well. Thank you. Good luck.